This is Taking Stock on Bloomberg. I'm Pim Fox. Now, one of the big changes from the Obama cap and trade legislation would be the formation of a climate exchange to trade carbon emissions. I'm joined now by Ed Dittmeyer of Fox Pitt Kelton, analyst in the world of exchanges. Ed, it's good to see you. Wonderful to have you with us. Congratulations, getting married. It's good. Nothing's changed in life. It all looks good. What about looking good in climate exchanges right now? Are the climate exchanges, whether it be the London Climate Exchange or I believe even in Chicago they're trying to build this, is this really the wave of the future?
Well, a lot of people believe emissions and pollution trading can be very big, perhaps as big as energy trading is today. In fact, the products are related. The Climate Exchange is the same company that is the Chicago Climate Exchange. So the company's European arm is already very successful. And that company seems well positioned in the U.S. sphere for when we do have a cap and trade program.
Okay, now I know you don't specifically cover the climate exchange, but you do cover a company, the ICE, the Intercontinental Exchange, that recently bought a decent chunk of the climate exchange, as you were telling me earlier, from a hedge fund, an opportunistic deal perhaps. Why do you think they did that?
Well, the ICE provides a trading platform and clearing services to the Climate Exchange. So they're business partners. The Climate Exchange, basically runs a lot of the intellectual capital around creating the product. And so it does represent a closer alignment of those two companies. And, of course, the possibility exists, although neither company is saying so, that eventually ICE might find, the Climate Exchange an attractive target.
All right. Now, I know you've been following the ICE specifically. Do you have any news for us on the ICE as far as you're concerned in terms of ratings or stock price targets?
I think ICE is a great growth story. The business, has a lot of things going for it versus peers. But I think as a stock that their price reflects a lot of that. It has a top valuation in the sector. And I think, perhaps, we're waiting for a better time to get bullish on the stock price. We're convinced it's a better business story.
All right, so everybody that already knows how valuable the stock is probably already in the stock in one form or another. What about the issue of interest rates? Because I know that's an area you've been trying to focus on. Take a macro view, say, what happens if we do get a decent change in interest rates, if interest rates increase? Who does that benefit? Not necessarily just the exchanges, right? Some other companies that you cover, MF Global as well as TradeStation.
That's right. Everyone knows about the bad things that come with higher interest rates. But, we found a couple companies in the brokerage industry, that could make a lot more money if the Fed moved off its 0% target that it has right now. MF Global and TradeStation are companies that we expect by 2011 could earn 2 to 3 times as much as they'll earn in 2009. And the principal factor of that is just simply higher federal funds targets, something, on the order of maybe 2, 3, 4% versus 0% they're targeting right now. So a lot of people have been talking about inflationary pressures. This is a way to play that trend.
Now, when you say play that trend, is this because the money that they have on deposit is just going to earn more interest, or does it have to do also with more trading, people shifting out of perhaps lower interest rate-bearing instruments into something higher?
Quite simply, when brokerage clients have cash in their accounts, the brokerage is able to reinvest that change at higher rates. At higher Fed rates, it will earn more money on that and be able to lend the money to margin borrowers at much higher rates. And so it's a simple function of that mechanics. It doesn't involve risk or anything like that.
Now, if we don't get higher interest rates, what do you say about the stocks? Because, I did some research. We take a look at what MF Global is doing. They're looking at the fixed income platform, the retail network. Are they putting the pieces together for a viable longer-term strategy?
Yeah, both companies have organic longer-term expansion plans. TradeStation adds accounts regularly at the rate of maybe 15% a year, and MF Global will be able to build out more trading and more different asset classes. But the growth that will come from higher interest rates over the next couple of years, we expect to dwarf that.
All right, now let's just shift if we can. I want to ask you about exchanges in general, because remember, we used to talk about how we're going to get this global exchange, right? We've got a lot of cross-border deals, NASDAQ, OMX, for example. Are we any further along to making this happen?
Even in the largest exchange companies tend to be a collection of smaller markets. And I think that, ultimately, right now, a lot of more things are going to be organized and put on exchanges, but some of those will be brand new exchanges. Some will be part of larger companies. I think there's enough organic opportunity right now that companies have turned their attention away from consolidation for the time being.
All right, so don't expect a lot of big acquisitions. Tell me about what's going on at CME, because I know that was built because of some big combinations.
That's right. So CME is virtually the entire U.S. futures industry right now. Huge concentrations in interest rates, equity index futures, and all kinds of commodity trading. They should stand to benefit from us leaving the financial crisis. They were the most severely impacted by the crisis in terms of volumes. In addition, they have the clearing capabilities to be able to compete for the over-the-counter derivatives business that the government is trying to push towards clearinghouses and exchanges.
You're stealing my thunder there. I want to know, what's the update right now? I mean, we've been waiting for some kind of resolution to this idea of, clearing over-the-counter derivatives. Where we are with this, because there are a couple of competing proposals, right? The CME's got a proposal, NYSE Euronext got a proposal. What's the status?
Yeah, right now, the Intercontinental Exchange, ICE, is the only one getting real traction. It's still a small part of the market. A lot of the regulatory push is not fully formed yet. It hasn't been codified into laws. This is a debate that'll, take perhaps years to congeal. I think it's something that, as far as moving the earnings of these stocks, it's something that could be a powerful thing, but might not be before, say, 2011 and beyond.
All right. Well, I know investors want something a lot sooner than that. And you're saying if you get some higher interest rates, look to TradeStation, look to MF Global. I want to thank you very much, Ed Dittmeyer, coming in from Fox, Pitt Kelton, sharing your thoughts with us about exchanges.